They are all equal. If I want to open a new transaction, and here I have the chart of gold, I go up here on the upper side, and there is a new order. So I press on it, and this page opens. When this page opens, what do I do? First of all, I check the instrument, the symbol XAUSD, perfect. I specify what kind of transaction I want to make. Is it market execution? Do I want to buy or sell at the current prices or pending order? You remember the pending orders that you checked with Reem? Buy stop, buy limit, sell limit. So if I specify pending order type, I can choose which pending I want. I want buy limit, buy sell limit, sell stop, and I decide which price I want it to be executed. For simplicity purposes, we're going to check the market execution. So once I decide I want market execution, I specify the volume, which is the lot size, the contract size. And for each lot, I have a specific amount. So for gold, if I put one lot, it's how much? 100 ounces of gold. If I put 10, 1,000 ounces. It means I'm buying or selling 1,000 or a value of 1,000. So for example, let's say I enter into one which is 100 ounces. What is the value of the money that I'm actually purchasing? It's 100 ounces times the dollar value in per ounce. So what is the dollar value per ounce for gold? $2,527 per ounce. If I want to buy 1 ounce of gold, I have to pay 2,527. So to know the actual value of my transaction that I want to enter, I multiply 100 times 2,527, so it will be 25,270. $252,700. It's a big value, but because we have leverage, we are able to utilize it. I specify the stop loss orders and take profit orders that I want, the levels. So before I enter the transaction, what do? I check where should I put my stop loss order and my take profit order, and then I specify buy or sell by market. We're going to do an example together. For example, let's analyze gold together at the same time. Based on what we're seeing and what we've learned about technical analysis, what is the trend here? It's an upward trend. Why is it an upward trend? Because I have impulsive correction, impulsive correction, impulsive correction, impulsive correction, and it's keeping on increasing. Am I able to draw a specific line that will make it more obvious for me? Yes, I am. So to draw a line, I go up here on this side so I can see all the different tools that I'm able to utilize to draw. And next to it, by the way, we have the time frames. You remember the time frames that we discussed? 1 month, 1 week, 1 hour, 1 minute. So here we are on the day D1, which is 1 day. Okay? So each candle represents one single specific day. Let's draw a trend line. This is a line that I'm able to utilize, or the tool. This is the low price. I have multiple higher lows, but from a obvious perspective, I can see that, okay, there is a possibility for me to draw such a specific line, for example. Because I have rejections here, rejections here, rejections here. What happened here? It's really good that it's happening now with us in this session. What happened here? Yes. What is the strategy that we've learned today? It is the bear trap. So the breakout occurred. Was the price able to continue downwards? It was not able to. So the impulsive trader that wanted, that wanted to sell here, what happened to them? He lost, or she lost. But for the people that went for the breakout above the previous high, what happened? Where is the previous high that I have here in this case? So this is where the breakouts happen. The previous high is supposed to be around here, approximately. So this is the previous high line, if you notice. What happened with the price? It went up, it barely broke above the previous high. Because it barely broke above it, I don't enter into the transaction. I want a proper breakout. So I want to see a candle, for example, this candle, I would have preferred for it to close at this level here, not below. Because here, at that level in specific, it's not considered as a breakout yet. So I stay patient, I wait for it to go back up and break above this level. So for gold in specific, it's better for me to specify the price of 2,721. Okay? Leave this point with you, 2,721. If prices on the daily time frame are able to break above that specific level, it increases the probability for the price to increase to test its all-time high. However, as we always say, this is not guaranteed. So that's why I need to use a stop loss order. So in case in the upcoming weeks, price of gold was able to go above that specific line or level, which is, as we mentioned, 2,721, and break rapidly, and visually it has to be a proper breakout. So at least I need to see the candlestick closing at 2,735 for me to actually enter into a buying transaction and put my stop loss. If it happens here, where do I put my stop loss?
Previous high, previous low.
So if I entered buy here, if I put my stop loss at previous low, it means I have to put it here, because this will be the previous low. However, this is too big. It's too far. For me to have a 1 to 2 risk to reward ratio, or 1 to 3, it means I have to make double this size, which is approximately, we're talking around approximately $80. So it has to be $160 of potential profit for me to actually enter to this trade. Personally, I wouldn't enter it. Because for me to have $160 profit, it means I have to go from here to approximately 2,910, give or take, which is above the all-time high. And what did we say in the beginning of the session? When prices come or come close to all-time high, it means people might start to take profits. So I stand by, I wait, I relax, and I wait for prices to go above the level of the all-time high, which is the 2,789. However, this is on the daily time frame. If I go lower, so let's say I go on the M15, I will have much more opportunities that I'm able to trade. Because in this case, for example, look what happened. In this case, I can draw a specific new trend line from here to here. Okay? This is a high, this is a lower high, and this is a lower high. If prices were able to breach on the short term, I'm talking on the short term, to breach the downward trend and the previous high, which is 2,648, on the short term, I can speculate that most probably prices will continue to the upside, so I will try to take a transaction, a buying transaction on that specific level. Let's make it a bit more fun. Let's go to the 1 minute time frame. So 1 minute time frame, it means each minute a candle will close or increase. Based on what we're saying now here, what is the overall trend? Based on the recent, this one, focus on this visualization only. It's somehow downwards, but at the same time, it's sideways movement. So here I put a resistance line. Look how beautiful this resistance line is. 1 point, 2 points, 3, 4, 5 rejections. So out of the first and second, I had the opportunity of selling on the third time, fourth time, and fifth time at the same time. The support line is here. So as long as prices are within these ranges, I'm gonna try to benefit from the support and resistance lines. So here we have the support line. We have 1 point rejection, another point rejection. As long as gold prices on the 1 minute time frame are between these ranges, I'm not gonna trade anything. I'm gonna wait for a clear rejection from either a support or a resistance line. And this is how I utilize candlesticks in combination with price action and bull and bear trap strategies as well. Now, something also